McDonald's. McDonald's builds a big cup with a handle, drifts down, and once it's had the drift down, occasionally you can have it in the early part of the handle, but normally it should be in the end of the handle so that when you have it, as soon as it comes back up through, you buy right in there. They've gotten the last few little people that will sell out of the stock in that drift down phase. So it breaks out, goes sideways, pretty tight, bounces off the line, you get a chance to add again. Then you have 3 weeks tight, a little bit higher, you add again, and you have altogether 18 weeks in a row up. Now, what does something tell you if it has 18 weeks in a row up coming out of a base? It says probably it's going to go up quite a bit more before the thing's over. So it is telling you something. What's it telling you? Well, it more than doubles again. So you run up and you pull down. The volume was only up 7% when it finally closed below a line. And it was a small spread, too, so there's no big selling going on there. You build sort of a flat area, and you bounce off of some lines. You get a buy and an add point in there. You go up and you're holding tight around that 38 zone. You get a chance to buy bouncing off the line, and also up at the 44 line. But you do have a channel line that is broken on the upside, and you sell. Now, up the top, there's a little note that says, market begins a 2-year bear market. McDonald's goes from 77 to 21. Does it pay to know and use sell rules on the way up? You don't just have buy rules, you have sell rules, and you want to sell on the way up. And sometimes these leaders can correct a lot more than you think. So if you get enamored with it and fall in love with it and say, well, I think McDonald's is so great and I'm up a lot, I'm just going to be a long-term investor in McDonald's. And it goes from 77 to 21. And sometimes it takes them a long time and they never come back.